The price of natural gas, well, is there anything really rational in the world of investing? Certainly not the price of natural gas. But here to give us some insight is Nick Pope. He is an expert in the field for Dahlman, Rose & Company. Nick, always good to have you. Thanks for coming in. What's going on with the price of natural gas? You listened to the Southwestern call that just occurred. What did they say on the call that gives you some, insight into what's happening to the price?
Well, I mean, Southwestern today, it was interesting. They reported their production looked fantastic. They're on a great growth, track right now in terms of their production. But they did have some issues that came up because of some pipelines that caused some, it's something you see a lot where you see some localized issues with some of these companies where they had some pipelines that had some downtime, and there were some mechanical issues with pipelines that actually caused them to lose to lose a fair amount of production on the quarter, and they're going to lose a fair amount of production going forward for the second half of the year. So it's having an impact on production, and that issue with the pipeline is also causing pricing that Southwestern saw during the quarter. It actually affected pricing and will continue to affect them for another 6 to 8 months.
So this is not really great news.
Well, it's not great news for Southwestern, but
right.
it's a near term, it's a one-time type issue. It's something that's causing them a little problem here in the near term, but whenever you just really kind of net out what the ultimate effect to Southwestern is, it's probably a $50 to $70 million impact to Southwestern, which is it's a pretty big company. You're talking about 15 cents a share type impact, and really doesn't affect the long-term growth trajectory that Southwestern has on its production.
All right, but doesn't that kind of highlight this whole thing that even when we talk about natural gas prices, we're really kind of not being intelligent about it, because natural gas is still very much a local commodity. Even though it's traded all over the world, and we like to think of it as this global energy source, it's all about local, right, when it comes to natural gas.
Absolutely. It's local within the U.S. versus the world.
Right.
And there's local issues within the U.S. And so, I mean, Southwestern specifically produces the majority of their gas in northwest Arkansas. They also produce a fair amount of gas in East Texas. And so you see issues there where they have pipelines that they're trying to get their gas kind of further to the east, a lot of the big consuming regions in the northeast.
They have to get it to people that are going to use it.
Absolutely. And so they have a pipeline. The actual pipeline that's having the issues right now is getting them really into the northeast markets. And what happens whenever they don't have this pipeline online is they end up, essentially sending their gas west. It takes a much more circuitous path to kind of the consumers, and the effect is that they see lower prices and get lower realized prices for their gas. All right,
so you got this pricing differential, right? You got the prices really. Let's just say, okay, talk about Arkansas and the eastern portion of Texas. What about pricing when you look at what's going on in the Rocky Mountains? I mean, what's the differential, and what does that mean for an investor?
Well, it's you see between the Rockies and kind of the Gulf Coast, the big historical producing region for natural gas. I mean, right now you're seeing gas at Henry Hub in South Louisiana trading at in the near term $3.50 to $4 range is where it's kind of been bound here in the past month or so. What you see is they're getting it $1 to $1.50 less right now, and actually it's always a pretty significant.
Where are they getting the $1.50 less?
In the Rockies.
In the Rockies, right? So there's that price differential. It's less in the Rockies, more down in the Henry Hub in Louisiana. And
it's really it's completely, the issue is completely based on transport capacity. And you see gas, it's not as easy to transport as crude oil. It's you have to have a pipeline in place, and it's fixed. You have to have compression in place, and it's fixed. And it's we've seen in the past 10 years a lot of different regions that have really started to change where the supply in the U.S. is coming from. We've seen some new areas that have become big producers and a bigger piece of the U.S. production picture. The Gulf of Mexico is not as big a piece of the picture as it used to be. Same with the Gulf Coast. You're seeing a lot of new areas in the Rockies, a lot of new areas in kind of eastern Oklahoma and North Texas that really have brought on a lot of production in new areas. And the effect is the pipelines aren't necessarily set up
to distribute all of that natural gas.
Yeah.
Okay, so you've got these price differentials. It's less expensive shipping it out of or getting it out of the Rockies right now than it is out of Louisiana area. what about the effects right now on the prices? I mean, are we going to see natural gas, Henry Hub natural gas, you said $3.50, $4 was the range. Are we going to see that crack $3? I mean, is there any demand right now for natural gas that would lift the price?
Well, I think you actually look at it, the differential there, like the low prices that they generally see kind of west of the Mississippi River, it's actually started to shrink a little bit, that differential. And a lot of that's, you're seeing extremely hot weather like down in the south and southwest where demand is actually not as bad as it's been in the Northeast. So some of those historic differentials are actually shrinking a little bit, so they're actually seeing a little bit of a benefit to the West. But one of the things that you also have to realize is $3.50 gas at Henry Hub in South Louisiana implies, $2.50 gas in Wyoming, or even maybe $2 gas in Wyoming, and similar type pricing in Alberta and Canada. And so because you see those lower prices, there's the marginal cost of production is, you're a lot closer to it in some of those areas.
Yeah, I mean, how do you make money doing this then? I mean, don't the guys who are in the executive suites kind of scratch their head and say, look, how am I going to make money selling natural gas at $3 per million BTU? We've got to take a look at our fields and see if we can bring some offline.
Well, I mean, the gas that's actually producing right now, the actual cost of continuing to produce a field that has a well that's been drilled and is already in place is not that much. I mean, you're talking about,
So they're still making money at $3.50?
They're making money on the wells that have already been drilled. Like 75% of your cost is kind of sunk day one when you drill a well. It's the drill cost, and the ongoing operations cost for taking gas out of the ground is not as significant. So the rate of return that you're looking at may not be great at $3.50 gas, but to continue, they're making money continuing to produce
Continuing to produce with the wells that they've already sunk into the ground.
Right.
All right, we're going to continue the conversation. We've got more with Nick Pope. We're going to take a look at some of the stocks, Southwestern, as well as another stock pick that he has. Find out, is this the time to actually buy these natural gas stocks? We'll find out. This is Taking Stock. This is Taking Stock on Bloomberg. I'm Pim Fox. We're talking about energy and natural gas. My guest is Nick Pope. He's an expert in the field at Dahlman Rose & Company. And Nick, okay, you listened to the Southwestern Energy call today. You described that they had some problems with the pipeline. We talked about pricing. Give us the stock pick. Is it really something we should be buying right now?
Well, a lot of the gas stocks, the gas-producing stocks, I think are pricing in there is an appreciation of gas price that's implied in a lot of these natural gas.
So they got a rosy outlook here that may not come to fruition, right?
Yeah. Whenever I look at like my group of kind of natural gas weighted stocks, to me it looks like they're probably pricing gas of maybe $6.50 to $7 long term in the stocks right now.
What do they know that we all don't know, or is this just hope?
Well, I mean, I think what you see is we discussed the near term issues where there's a lot of supply and it's not necessarily the producer can continue to produce it and make money, but they're continuing to drill new wells to replace the declines that you see every day in the production in the U.S. And so what you have is the rig count, the new wells that are being drilled. I mean, that's fallen off dramatically since September, and so there is an expectation that at some point with this much fewer rigs running than we've run historically, that's going to have an impact on production longer term. And so a lot of investors are really trying to find where is that crossover point between kind of this near-term oversupply and that longer-term like underdevelopment of kind of natural gas that we're seeing because of where gas prices are right now.
All right, so if the companies are looking out, and let's just assume they got a rosy outlook and they're looking at what you say maybe $5, maybe $6 per million BTU. Current price $3.50 per million BTU. This is for Henry Hub. Mm-hmm. What's the outlook for Southwestern Energy stock? Would you buy the stock right now in the hopes that this is all going to turn out well?
Well, I mean, Southwestern still it's my favorite natural gas weighted stock. It's got such a impressive growth trajectory here for the next few years. Mainly focused in this Fayetteville Shale in Arkansas. And so, I mean, I still think there is upside in Southwestern. I think there's a limited amount of upside on all the natural gas stocks. I'm a little more concerned about that group.
Okay, all right, well said. All right, but you got a buy recommendation on Southwestern. You like the production profile of the company. Let's turn our attention now, if we can, to more oily stuff. Let's talk about Concho Resources. Right. What do you like about that? What's the outlook for oil? Almost $70 a barrel today.
Well, I mean, I look at Concho Resources, and really, they're a great operator. It's not a large company, but they're very focused in the Permian Basin in West Texas and southeast New Mexico. They have a couple like larger fields that they focus on. They really focus on these operations. They got a really nice solid growth trajectory with their oil. They're actually they're somewhat balanced on their production. They have about 60% oil, 40% gas, which for the U.S. independent E&P companies, that's definitely oilier than the group. And so I do like a bit of that mix that they have. So they have some protection, I think, and there's a little diversity in their commodity mix. But you look at it, they've got a couple really nice growth plays, really strong economics that are kind of being supported by the oil right now. And you look at like what they're spending in terms of their drilling budget, and it's they're spending under their expected cash flow, and they're growing probably 20% production.
So they get to keep a little bit more of that cash back. What do you expect on Monday? Because I know that they're going to report earnings.
Well, I mean, they actually have guided towards flattish production quarter to quarter, from the first quarter to the second quarter. Looking at them occasionally, because they're so focused, they might have some operations issues that cause some production difficulties, but just it doesn't look like they had any of that type of issue during the quarter. So I think the production should be pretty solid. I think commodity prices that they saw during the quarter are also pretty solid. So I think, all in all, I think it should be a pretty solid quarter.
All right, we're going to have to wait till Monday to see what happens. I'll give you a call if anything goes amiss. All right, I want to thank you very much, Nick Pope from Dahlman, sharing your expertise in oil and natural gas.